Sergey, sir, it's great to have you back here on the road to autonomy, and thanks for being the world's greatest sponsor, which you are, Koop. You sponsor This Week in the Autonomy Economy, so thank you for allowing us to publish our opinions and analysis. And, sir, you have great insights into autonomy, into fleet management, and insurance. And so when I called you up and say, hey, Sergey, I'm starting to see the Cybercabs. I'm seeing them in Austin. I'm seeing them in Palo Alto. And I said, well, I know someone that's got a really good, insightful opinion. What are your thoughts as all signs point to Tesla getting ready to ramp up and commercialize the Cybercab?
Thank you, Grayson. Always a pleasure to be back. And yes, all eyes on Tesla. 2026 is going to be a huge year for them. First of all, we know publicly that they plan to ramp up the production of Cybercabs around April 2026. I assume they would not have done it without having conviction about where their self-driving strategy is headed. And as you noticed, or as you mentioned, that there are Cybercabs spotted on the streets, probably testing before the production goes into ramp. And I've heard rumors from Koop, obviously, that people started inquiring with us about insurance. And from some of those conversations, we learned that people think that Tesla is going to open up the network in February. Now, we don't know exactly what it means to open up a network, but we think it means that you'll be able to put your Tesla on the network for self-driving operation as soon as February. And maybe it'll be available to limited number of people, but that's what the rumor is. And supposedly there is a whole registration process that you have to go through. You obviously have to go through each state as well. And because technically the vehicle will be classified as a commercial vehicle, not just personal vehicle. And I think that there is at least 10 instances where people are thinking about doing that. And all of them said more or less the same thing, that February seems to be the time frame when the network supposedly will go live. I think that's huge if that's true. Also, the timeline might be different, but let's assume it's February. If it goes live in February and then the production starts in April, I think by the end of the 2026, we're going to live in a very much different world where Tesla is just going to flood the market with their own fleet and also with third-party owned fleets, which in my view is going to be huge. So that's the rumor. And I think it has huge implications for the self-driving industry, especially when it comes to the partnerships and how the ecosystem will develop. And if Tesla gets into the partnerships game, that's going to be a game changer for lots of vendors in that space.
It's going to be a game changer as we look to analyze the potential deployment of the Tesla network. Should we follow this and look to markets where Tesla currently has an insurance license? Should we look at those markets to be the potential markets? Because you clearly stated it's going to be a quote unquote commercial application, as we've seen from Uber and Lyft. The insurance dramatically changes.
Correct. And I think we should double click on insurance because Tesla does have a personal auto insurance product in multiple states, not all of them, but in multiple, I think in 20 or so. But the question is, will that product be sufficient for the autonomous vehicle operation? I think the answer is no. And there are two ways how insurance can evolve for Cybercab. It's either can be self-insured or you have to have a separate product for that, separate policy. Now, can we use insurance as a proxy for where Cybercabs are going? Probably yes, but we know for sure that it's Texas and Bay Area. I honestly think Tesla will likely go to the biggest markets first, similar to how maybe Waymo has scaled. If you look at the Waymo's expansion, it's clearly the biggest markets. So it's California, Texas, Florida, New York, and then they tapped into some others. I believe they're doing something in Illinois, Arizona, and others. So I think Tesla will follow the similar path. So insurance will not be kind of the guiding principle for where they select to deploy, but insurance is going to be 100% the bottleneck how they're going to deploy, or whether they can deploy at all. And that probably deserves a whole separate rant.
You bring that up because in Autonomy Markets that I host with Walter Piecyk, we get some interesting comments from time to time. And one of the feedbacks we get, you cannot launch a self-driving car without robust sensors. You must have LiDAR because insurance is not going to insure it unless you have LiDAR. You run an insurance company. Can you debunk that for us, please?
LiDAR is not a requirement for insurance. That I can tell you 100%. And I think the reason why some people are talking about this, there might be insurance underwriters on the market who got an idea that LiDAR works, or you need LiDAR to be at some level of safety. That's not how we operate. We operate differently. We look at the real world data, and that's what informs our underwriting decision. So if you have LiDAR or don't have LiDAR, if the metrics show good performance, so that risk becomes underwritable for us. So I think this whole notion of LiDAR, as far as I know, has been disproved. And you can see there are some players on the market which went from having a very high valuation to now closing down, and some OEMs pulling out of the LiDAR deals. I think that's telling. And with the imminent launch of Tesla, which, as we know, Tesla doesn't use LiDAR, I think we're going to see a situation where data becomes the king. And if data is good, then it's good to go. That's what insurance, by the way, has all been about in the first place. It's been about data. So if I can have some new technology and I know which data I'm looking for and the data is good, then that risk becomes insurable. So it doesn't necessarily mean what kind of specific things you have in your tech stack. That's secondary in our view.
What type of data are you going to look for when an individual buys a personally owned Tesla? They buy a personally owned Cybercab. What data are you going to look to when you look to potentially underwrite those vehicles?
We'll talk about the structure. We need to talk about whether it's going to be the individual or fleets or Tesla itself. But in terms of the data, we're looking at the behavior of the vehicle. If you look at the probably last 30, let's say last 20 years of automotive insurance, of auto insurance, both commercial and personal, one thing that we were able to do, we were able to connect driver behavior to the claim outcomes. So it's been proven that the worse you drive, the higher chance you're going to get into an accident. That's been proven. Okay. Or the worse you drive, the higher the chance that you're going to become a threat for other people who drive well on it, and you share the same road with them. So we take the same notion to self-driving cars. So if we can drive the difference between how humans drive versus how AVs drive, that informs a lot how we make underwriting decisions. Waymo posted their safety stats out there. The difference is clear. It's 80 to 90% better performance than humans. Tesla has been posting statistics about their autopilot and FSD performance. It's the same story. So we carry that over into our underwriting program, which passes the benefits, these benefits to self-driving car developers and operators eventually. The metrics that we look at are all about the behavior. So you can think of the worst thing that happens is an accident, but then there are behaviors and types of behaviors leading to that accident. It could be harsh braking, harsh acceleration, harsh turning. It could be near misses, which, by the way, are very telling of the potential accidents that you might have. And then you do it across different parts of the city or parts of the operating domain. And then there's a lot of data to play with. But it's like a pyramid. There are harsh accidents, which are the real crashes, and then there are near misses, and then there are like smaller behavioral accidents, and they all correlate to each other. So that's our approach, and I believe that's the approach that other people take. But that's the data that we're going to mine for across all of the use cases, be that Cybercab or some other OEMs or operators.
And since it's my belief that a lot of these Cybercabs are going to be deployed in fleets, where you're going to have an individual perhaps pull some money together with friends, they set up an LLC or some corporate structure, 5 vehicles, 10 vehicles, and then you have the larger fleet owners. Perhaps we see it in trucking. You might have an individual who owns 2 or 3 of them. How is that going to change underwriting since you're putting an entity in the middle of it?
I think so. First of all, let's lay out the 3 different scenarios for Cybercab ownership. And then we'll talk about fleets. So the first scenario, which is what's happening right now, is that Tesla owns and operates the fleet. So Tesla has the Robotaxi network. So it's like a fleet management tool that they use internally to match supply with demand. They have a customer-facing app. Then they have the Cybercabs, and then obviously have the software. And they do everything in a vertically integrated way, meaning that they own the vehicle, they carry it on the balance sheet, they provide the service, they collect the money, and then they also maintain the vehicle. So they clean it, charge it, update the software, etc. That's how it's going to be. And it's always going to be there because Tesla will probably want to test out their latest software. They might want to test out different markets. So they're always going to be doing that. But the question is that the model that they're going to scale with? So just think about the sheer number of vehicles out there. I think in the US, it's hundreds of millions, and then it's like 90 million new vehicles sold every single year around the world. It's impossible for one company to own all those vehicles, right? So I think the largest fleet in the world might have just a little bit, maybe close to 1 million vehicles, and 1 million self-driving cars are not going to cut it just for the US. Forget about the rest of the world. So we're talking about tens of millions of vehicles. Okay. Now, will anybody want to carry that on their balance sheet? I think the chance of that is zero. Not Tesla, not Waymo, not anybody else. So what's the second best model for cybercabs? Well, the second best model is to do what Tesla has been doing really well in the past 15 years, to sell those vehicles to individuals, to me, you, and everybody else. Now, I know you own Tesla, and you drive it every single day for personal use, but will you, as an individual, be able to make money from the Tesla by putting it on a Tesla network? It looks like they circulated this idea, but technically, I don't think it's going to work like this. Most likely, what's going to happen is that you, Grayson, you'll probably say, "Hey, if I can put one vehicle on a Tesla network and make money from it, why can't I put two or three or five or 10?" And now, if you're thinking about one or more vehicles, you're already becoming a fleet. Now you need to form an LLC, and you're going to be treated as a commercial fleet, no longer as a Grayson's Tesla. And then that LLC will have to transact with Tesla to put those vehicles on the network. And I think that's how it's going to evolve. We'll likely see lots of smaller fleets popping up all over the country. Some people owning like literally one vehicle, some people doing maybe 10, 100, eventually 1,000. And that way, Tesla can scale without carrying all the capex, but collecting all the software money. And that's going to be a game changer, not only for Tesla, but also for people who want to make money from autonomy. And that's where I think it's going to open up huge opportunities for third-party partnerships for Tesla. And it's probably going to be the first instance where we're going to see Tesla share its economic value with other people rather than vertically integrating. And that's going to be huge. So that's where everything is headed, in my view. And I do not think it's going to be personal ownership in the future. There are going to be personally owned fleets, like LLC-owned fleets, but I do not think that individuals will have to own Teslas and put them on the network.
The fleet aspect is interesting. So let's just say I'm a fleet owner. You, Sergey, you're a fleet owner. Let's just do simple math. I own 100 vehicles. You own 100 vehicles. You have them deployed in the Northeast. I have them deployed in the Southeast. Do you see a point where the fleet owner will set a geographic OTD? Okay, I don't want you going out of the state. I don't want to go more than 300 miles away from base. Do you see stuff like that potentially getting implemented into this fleet model?
Absolutely. And I don't know if you'll be able to set a custom geofence, or it might be zip code constrained, but that's how it's going to be. You mentioned trucking earlier. So I know that there are many independent fleet owners, operators, where they operate maybe on one or two routes. Okay. And they happily operate with big trucking companies alongside the same routes. So probably will be a similar thing with Cybercabs, that you choose a location and then you set a certain perimeter that you operate within. And that decision can be driven by multiple factors. First of all, okay, how far do you plan to go, knowing that you have to charge the vehicle? Okay, or let's say if something happens to the vehicle and you have to retrieve that vehicle, how far are you willing to drive? Okay, or let's say it'll also mean that if you, let's say, have a depot in Jersey City, maybe I will not be able to go to, let's say, upstate New York because it's going to be too far. Okay. And then I don't want, let's say, if my passengers want to book me from Jersey City to upstate New York, I'll have to set a limit on how the ride can be, and I'll just not be able to do it. Or I'll have to figure out where I can charge the vehicle there so it can come back. So it's going to become very, very numbers driven, and people will decide, okay, here are the parameters I don't want to violate for my operation, and here's how much area I can cover and how much money I can make from it. So it's going to be fascinating. The question is it going to be done manually, or is it going to be a product like that where you can automatically figure out which area you can serve, and maybe it can be done by Tesla or by some third-party software providers? We yet to see. But you're 100% right that there are going to be constraints, and people will be slicing and dicing the United States in terms of who got what part of the self-driving car operation.
So then, do you envision the vehicles only being available on the quote unquote Tesla network, or do you see these vehicles potentially going on third party network?
Great question. I think Tesla will run on Tesla, and other OEMs probably will be able to run on Uber and Lyft. So let's say if I am a fleet owner operator, really, let's say I have the financing. So I have a few $1 billion, and I want to run an autonomous vehicle business, and I want to make money by giving passengers rides. I go and buy Teslas. Okay. Then Tesla runs on the Tesla network. But I also want to go and buy Waymos. And Waymo will run on Waymo network, or maybe on Uber, maybe on Lyft. And then let's say I want to go and do somebody else like Wave or Emotional. And it would be great to have one place where you can just run everything. Maybe you run everything in Uber. I think it'll be great. But I just don't know how Tesla plans to work with Uber. I wouldn't be surprised if Tesla becomes a closed ecosystem, and that you can either do Tesla or something else, or you'll require to have different apps. We yet to see. So maybe there is an opportunity to develop a tool that will actually aggregate all of those in one place, where you can do fleet orchestration across multiple autonomy platforms in one place, and then you can automatically connect to Tesla network, Waymo, Lyft, Uber, etc. And you can actually kind of switch vehicles from one network to another. That would be pretty cool. I don't think a product like this exists. It's not needed right now, but I give it a couple of years, they can be an opportunity.
I see the Tesla vehicles operating in a closed network, but I'm not a lawyer, so I can't give legalities on it. But I mean, I wonder if there are certain legalities. If you legally buy a product, you can only operate on a network. I'm not an antitrust an attorney, so I can't give an opinion there. But I think that's ultimately where Tesla would want to go. And I ultimately believe that individuals that buy the Tesla vehicle, the Cybercab in this case, will want to deploy it on the network. And then what you mentioned earlier about the limitation where the vehicle can go, I'm sure that's going to be a setting inside of the Tesla app when you put your vehicles on there, and you'll probably enter into some contractual agreement with Tesla. Let's call Tesla Rideshare, whatever they're going to call the entity, and it'll tell you what you can't do. Let's look at certain areas of the United States. Let's look at Westchester County to Fairfield County. So you look at the Bedford Greenwich line, overlaps all the time over there from one state to another. How do you manage that from an insurance perspective? Do you have to ensure that that vehicle, if you're operating in that area, is able to legally operate in Connecticut and in New York?
Great question. I assume that there's going to be either a federal framework or a state-by-state framework that allows self-driving cars to operate in the first place. Let's get out of the way. I think it'll be done. Okay. Now, insurance-wise, right now, insurance is sliced up across all 50 states. There are different requirements for commercial fleets. So you might be operating in one state. As soon as you cross to the other state, you need to make sure that you satisfy both requirements. Usually requirements come down to having an insurance policy from up to a certain limit from a carrier that has a certain rating. That's about it. Okay. So the state just wants to make sure if an accident happens that everybody's protected. And if you have multiple states and have multiple requirements, you satisfy the highest requirement, you're good to go. Now, the question is, how the heck you're going to satisfy the requirement if it's a self-driving car? Okay, so the car is literally, it might have a wheel, might have no wheel. And then for you to insure it, it means that there has to be an insurance company that's willing to take the risk. Now, there are two ways this can go. The first way is that Tesla says, look, we're going to provide you with an insurance product, okay, or we're going to self-insure and test self-insure and extend that self-insurance to our precious fleet owners. Now, it's possible, but that means that Tesla will carry all that risk on the balance sheet. Will they be able to carry a risk for millions of Cybercabs simultaneously? Great question. I think the answer is no. I think it's going to be way too much risk. Because don't forget, auto liability is not capped. If you accidentally incur a million accidents at the same time, it will just stack up without the ceiling. It's not like product liability where there is usually a cap or the aggregate limit. So I think most likely what's going to happen is that there will be new products on the market, and that those products will be specifically built for autonomous vehicle fleet owners and operators. And that product will take into account the fact that the driving is done by software, that the software performs extremely well, and most of the risk is actually going to be in some miscellaneous things like, hey, unpredictable weather, or there was an error in maintenance, or some really, acts of God that you cannot think about. And that auto liability product for autonomous vehicle fleets will be very well priced, meaning that most of the risk from human driver is going to be taken care of by the software, so it's not going to be in your policy. And let's say if something does happen due to the software error, it'll be subrogated against Tesla or other OEMs, and whoever provides that insurance policy will have to figure it out with Tesla. And now you have a situation where the autonomous vehicle risk can be spread out by many different insurance providers in different parts of the country. And that becomes much more manageable. Just how you let other people buy Cybercabs and, make benefit from those Cybercabs, you will let other insurance companies insure autonomous vehicle fleets across a huge capital base, which will not be concentrated within one OEM and can take that OEM down if something happens. So from the insurance perspective, that's probably how it's going to happen. And I have a ton of confidence that each state will have no problem with such an insurance product. And then such an insurance product will satisfy all the state-by-state requirements. So to get back to your point, if you have a Cybercab operation and you go from one place or from one state to another state or to multiple states, there is a solution where it's not going to be a problem. And I do not think that, I really hope the regulations will catch up and insurance will catch up. But when it comes to having an insurance product to meet all those regulations, we will have that.
How much capacity, or I'll ask you this way, what's the appetite in the underwriting world today for autonomy? Because you see it just on a personally owned Tesla, which I own with FSD. Those rates go from here to here to here, and there is no consistency. And so I'm the weirdo that calls and asks questions. Why? Oh, to replace the technology. I was like, okay, you just fundamentally don't understand this. Is there capacity? Is there appetite just based on what we're seeing in the personal car ownership underwriting market?
I would say there is not enough capacity. And the answer is I don't think the insurance industry fully understands the self-driving car space. So, originally the insurance industry got into that space by insuring projects, one-time project where you have, a certain location, it's super geofence, it's primarily for R&D purposes. And then when we got Waymo and Cruise, which no longer with us, we entered the first commercial deployment, and that commercial deployment was self-insured. Okay, so and it works well. If you look at Waymo, the results are pretty good. Now we're about to enter the third phase where autonomy actually goes into the wild, and there's going to be different fleets owning and operating self-driving cars. So for that specifically, I think the insurance companies are not prepared yet. And the good news is that I think it's pretty clear how the product should look like and what it should do. I think the insurance industry in general just lags their thinking and their momentum. As I mentioned earlier when we started the podcast, 2026 is going to be a huge year for Tesla, and it's going to hit a lot of people like a snowball that, oh my God, this happened. We need to do something about it. And I'm really looking forward to that moment. That's something that we've been working for the past couple of years. And when that happens, I really hope we will be able to help lots of those Cybercab owners and operators with a good insurance product that's going to clear lots of requirements for them. So capacity is always an issue, but I think that eventually it'll catch up. And obviously, there is a huge alpha in between now and when the rest of the market catches up, if you know what I mean.
Big time. So you're Mr. Insurance, you CEO of Koop. What does the product look like? Because I know a little birdie told me that you're designing something over there, sir. So what's the product look like?
The product that we're working on is the product that will allow autonomous vehicle fleet owners and operators to clear insurance requirements. And that is the product that will ensure autonomous vehicle operation on a primary basis, meaning that if something happens, whether you are in a manual mode, in a self-driving mode, or in a garage, that insurance policy will be your first line of defense. Okay. And then once we know what happened and we have the data, we'll be able to figure out, hey, is it actually the liability of the fleet owner operator, or is it the liability of the autonomous vehicle developer? And developing on whose liability it is, it will go the certain way. If it's autonomous vehicle owner operator, we pay the policy. Okay. If it's the developer, then we go and subrogate the developer based on the common investigation and settlement that this is what happened. And now that goes onto their product liability insurance tower. So I believe that, and that product, by the way, actually will provide a ton of convenience to autonomous vehicle fleets because it'll be very well priced. It'll be very convenient to get, and whenever claims happen, we'll be able to pull all the necessary data to make a decision really, really fast. And what we're going to see is that the premium volume is not going to be as much for traditional commercial autos because there is less risk. Okay, but that's totally fine. What we're going to see is extreme profitability because based on our experience and based on the market data that we have out there, there's going to be way fewer losses, and that means for insurance that there's going to be way more profit, and then that profit can be further used to even further improve the rates for autonomous vehicle owners. So that's the product. I cannot share more, but I can tell you that this is going to be a very important product to commercialize self-driving at scale in the United States, regardless of what the regulation comes out to be.
Well, when the product's public, you're coming back on. So I won't push you, but I'll just say when the product's public, you're coming back on. The profitability thing is really interesting, and you bring up a valid point because I believe we are getting to a point in society where a small portion, soon to be a larger portion, and eventually a very large portion of the population will not want to drive anymore. I don't drive. My Tesla drives me, and I don't really want to drive. And then obviously, I think when you don't drive for long periods of time, your motor skills from driving decline. So we're gonna get to this really interesting point. So you're eliminating, let's call them early drivers that historically, let's look at underwriting tables, very bad drivers, very risky, higher premiums. And then at the end of life, older individuals, cognitive issues, bad drivers. Do we get to a point then where this underwriting becomes more profitable because you're eliminating two of the riskiest pools? And I forgot teenagers, but so let's put them in there. But you're eliminating three large risky pools?
Absolutely. 100%. So, as we discussed earlier, human behavior is predictive of car accidents. And you just described the categories of people that tend to have risky behavior. So, with software just eliminates that. Okay. And that's what's going to drive the insurance underwriting performance. And we do think that the underwriting profitability is going to be amazing, but it's going to come at the expense of lower premiums. Because you cannot, if there is lower risk, you cannot charge the same premium. Okay. By the way, it's going to be a huge problem for insurance companies because insurance companies are built in a certain way where you have a premium base. Okay. Let's say it's one, or it could be a million, billion, trillion, whatever. And then part of that premium base is used to pay losses. Okay. And historically has been I think around 70% across property and casualty. And then the rest of it is used to cover expenses. Okay. And they have to pay their bills, they have to pay their people, they have to buy software. Now, what happens if the losses become so great, so much better that you no longer have your original premium base? Well, the premium base shrinks, and now you have less money for yourself, and you can't pay for as much people as you used to have, and the model becomes challenging. That's why I feel like it's a lot better to start like a new insurance program or a new company that's going to go after the autonomous vehicle space than having those traditional insurance companies try to reinvent themselves around way lower premium base and way lower accident rates. Um, I think this is just going to be challenging for them. But on the flip side, they have a ton of capital. Okay, and I'm pretty sure they wouldn't mind deploying a part of that to a new asset like self-driving cars. So I think what it means is we are going to see much better profitability. It's going to be lower premium. Early on, we will not have big insurance companies make some aggressive moves in that space, and by the time they do, there's going to be a ton of alpha that somebody will capture. I think it's going to be cool.
Well, I think you're right. Now, I'm going to break down the stack. Where do reinsurers come into the picture? Do they like autonomy? Do they not like autonomy? What are their thoughts, and where do they come into the picture?
As far as I know, reinsurance do like autonomy. If you look at top three reinsurers, that's Munich Re, Swiss Re, and Hanover Re, they all participate in autonomous vehicle risks and automotive risks more broadly. I actually think there is more appetite from reinsurers than insurers because on the primary insurance side, you need to build this whole infrastructure. You need to have a product, you need to have data sharing capabilities, you need to figure out how you're going to subrogate against very technical companies such as Tesla. And not a lot of people can figure that out. But on the reinsurance side of things, they're more numbers driven, mathematics driven. And when I give them the same spiel that I gave to you about how the frequency and the severity of losses is going to change and how it's going to make sense, they like that. So I actually I'm feeling pretty confident about the reinsurance markets that are going to appear for this type of risk. But I think I'm less confident about primary insurance doing the same stuff that we want to do. That's why we exist.
You do, because there is going to be a need in the market that you're going to fill. And I'm curious if we're going to stay in the liability here for a minute. When Tesla deploys the Cybercab, which we do not have a filing from NHTSA for a Part 555 exemption yet. So for the white house, no, you cannot deploy those vehicles without the exemption, without a steering wheel and pedals. But at some point, they will get the exemption, and Cybercabs will be on the road without a pedal and steering wheel. Sorry, pedals plural. Forgot that. Where does that liability going to live? Is that going to live at Tesla? And I'm asking that from a fleet owner's perspective. Let's just say I buy 100 of them. There's no way for anybody to manually take over. Where's the liability going to live?
The liability is going to live. The liability is going to be shared by the fleet owner operator and Tesla, and most likely it's going to be contractually driven. So it's going to be a piece of paper that draws the line. But I think it's pretty safe to assume that if a Cybercab is in operational mode and then something happens, and it was the software's mistake, that is going to be Tesla. Okay, it's going to be their liability because their software is their product. But it's also possible that the vehicles that are in possession and custody of the autonomous vehicle fleets might not have been properly maintained. Maybe they were not cleaned. Maybe they didn't check the vehicle vitals. Maybe they didn't upgrade the software. Um, it's also possible that some of the accidents that happen will fall within fleet owner operator. Now the question becomes, how does liability? There's going to be 100% the separation of liability, and that's where it becomes an issue because, well, to satisfy states' requirements for insurance, you need to have insurance. So you need to have a product that's going to go after both those liabilities as the first line of defense, aka the stuff that we talked about that we're working on, and then after an accident happens, you'll figure out who to go after who. Okay, and I think that's what we're going to land on. So fleet owners, operators are not going to be fully indemnified. They're going to carry liability, but it's going to be only a portion of the liability. The rest of it will be within Tesla, which will subrogate against if something happens and it's their fault.
You bring up a very interesting, very valid point around fleet management. Because you're saying that, Mike, well, what happened if somebody didn't check the tires? Seriously, you know that. That can cause deflated tires, hole in the tire. It could lead to a crash. Point blank, there's plenty of data from DOT and NHTSA to back that up. How do you see the fleet management angle working? And who's going to own it? Who's going to operate it? And how are these insurance policies going to overlap? Because I could see a lot of quote unquote risk in that part of the stack.
Already today, we can see fleet managers appearing. There is Move AV, there is Move.io. Hertz, I think, made some public statements about doing something there. I think Lyft acquired a company that is doing fleet management. We'll probably see some, I don't know, new companies appearing to do fleet management specifically for self-driving cars. And they're going to do garaging, they're going to do charging, cleaning. They'll have to figure out insurance 100%. They'll have to figure out compliance. Okay, there are actually compliance rules for operating commercial fleets in different states. That's a whole different thing. Um, the, and They'll also have to figure out how to obviously integrate their fleet with a fleet management system, especially if they have multiple fleet vehicles and developers under the same roof. I do think that fleet management companies, some will own those vehicles. Some probably will attract a third-party financing partner for it. It can go both ways. I think if you own them and then you provide the fleet management alongside with it, that becomes extremely attractive, especially for AV developers who can have that one-stop partner for everything. But at the same time, you can have different financial companies interested in owning autonomous vehicles as real estate. And I can clearly see that, let's say you have a fleet management company where they are getting paid maybe as a percentage of revenue plus some flat fees or something like that. And there is a third party owner who's not involved in day-to-day operations, but they just collect the check from the revenue that the vehicles generate. I think we'll see both, and extremely attractive opportunities for both, for the financing partners and for the fleet managers. So, and then if you think about it further, let's say when you get to a certain volume and you have millions of AVs on the road and it's predictable how they operate and there is a continuous revenue stream, then you can securitize it in a similar way how you securitize real estate. And now we're off to the races, and it's the new autonomy economy. Exciting stuff. But yeah, I think fleet managers are great. There is a ton of opportunity, whether they own that or do not own that. And I'm super bullish on that space.
Thanks for plugging the autonomy economy. So thank you for that plug. You're right. I could see some sort of real estate investment trust, commonly known as a REIT, where the real estate is packaged with the vehicle or some sort of financial product there. Thinking down the line, this is hypothetical, but I think a lot about this. Tesla manufactures a vehicle. They build the vehicle, the software in house. They own the supercharging network. Do you think, this is hypothetical, at some point there is the potential for Tesla to launch a fleet management business to manage the Tesla network?
I think they might already be doing this. So I'm pretty sure that the imminent launch of Austin and Bay Area implies that there is some fleet management component to it. Whether they do it out of their existing sites or dealerships, or it's some new location, it's TBD. But I think what Tesla, so if Tesla is doing everything in-house, then I think they already have the infrastructure in place. They don't necessarily have to launch it. They already have it. But once they start selling it to third parties, it becomes interesting because Tesla can also sell them fleet management software. And I think it'll be a great opportunity because I'm pretty sure Tesla already has it. They're just going to license it to other people. And now you come to Tesla, let's say you have a few $1 million you want to deploy you want to launch something in your city, you come to Tesla and you say, "Hey, I want to make money with Tesla." And Tesla says, "Great. Here are the Cybercabs. Here is the fleet management software. Here's the network, here's the contract." And then you kind of get it all, and then you go and register that with the state. You clear your insurance, you choose the site, you buy this whole thing. Tesla can even plug you with chargers, so you can buy those chargers, and you're good to go. And now you're making money in the Tesla ecosystem, and Tesla is happy, you are happy, everybody's happy.
So that's an interesting point. So let's hypothetically say Tesla launches, let's just call Tesla Fleet Management. Lyft, the company you mentioned, they acquired FlexDrive. They have their own in-house, which is doing well. They're managing the Waymo fleet in Nashville. Obviously, Waymo's using a series of partners. Uber, wherever they go, are using a series of partners. Could Tesla force the industry's hand to bring fleet management in-house if it's proven to be successful and highly scalable?
It can go both ways. I think the advantage that Tesla has is that uh, Tesla has been successful in many different businesses. And if they want to do fleet management, they 100% can do it. Other partners, it's TBD, because fleet management is heavy reliance on human operations. You need to have humans to manage those fleets. And, it's a lot of little things that can get into the way. It's not like a pure software business. So I it can go both ways. I do think that Tesla, in my view, Tesla will likely let other people do fleet management and have other companies pop up like Move than do it themselves. But we yet to see. I just not sure if they run the numbers and they see, hey, we're going to be making that much from FSD, that fleet management might look like a rounding error in terms of the potential revenue that it can bring. So maybe it'll come down to that. We'll see.
You never know. We will see a lot of things. Sir, it's been insightful. In your opinion, sir, what is the future of ensuring autonomous fleet operations? And I put on purpose plural because there's a lot more than just the vehicle.
The future is bright. I think for autonomous fleet owner operators, because insurance is going to be solved and it's not going to be a big problem. And I know the people, at least that we've been in touch to, they're really worried about this because they have no idea what to do. And for the insurance companies or reinsurance companies that participate in the autonomy economy, the future is going to be even brighter because of how great this asset class is going to be. So I'm extremely bullish, and I really believe that this is a unique opportunity to pretty much protect a new emerging market, which we haven't really seen before. I think the types of losses and the types of performance that we're going to see, we haven't seen that before, and that makes it even more exciting.
It's very exciting times. If you want to deploy a fleet of autonomous vehicles, cybercabs, or you're just curious and you have the bank to do it, call Sergey and the team at Koop. They will help you underwrite the future. The future is bright. The future is autonomous. The future is Koop. Sergey, as always, sir, thank you so much for coming on the road to autonomy and sharing your wonderful insights to insurance with us.
Thank you, Grayson.